Good evening. Today I want to talk about the payments industry. The first known fintech company which became very successful was a company called Square. Square was started by Jack Dorsey and his friend Jim McKelvey in 2009 in St. Louis, Missouri. What had happened is Jim was trying to sell some gas faucets and he could not accept credit cards as payment. He saw an opening by which people could transfer money without credit card payments. The first product they designed was a square reader. The name of the company derived from the shape of the card reader in a square shape. You could fit it to your mobile phone and it could read your credit card and make payments. The company was runaway hit. As you went along, it started to take various forms and it finally launched what was a cash camp. So they started a cash app which allow peer-to-peer transfers, what we are now using NCPI payment to do, like Google transfers between payment to payment. In 2014, they bought Caviar, a company which did restaurant delivery services. Today, what which we do, that is what is Zomato and Swiggy. But it also started a restaurant subscription services. That is, you could subscribe to it based on which you would get discounts on certain restaurants at regular times. Basically, it became a fintech company. The company in turn went public and did very well. Though we today know Jack Dorsey as the owner of Twitter and the CEO of Twitter, this company is more profitable than Twitter. Square trades at $247 a share in the New York Stock Exchange. It has a market cap of more than $100 billion. In February of this year, the market cap of this company was $120 billion. Square was a global fintech payments company, though several others have copied the same, like PhonePe and Google Pay. All this ride in India ride on an NCPI app. Why am I talking so much about this fintech company when it has become passe and everybody has copied this idea? Around the same time, Jack Dorsey did this. Two Australians had a great idea. They wanted to offer credit to the customer, but at the same time wanted a service by which customer could pay after buying a product. So they started a company called Afterpay. Afterpay, what the service did is basically you could buy a consumer product and pay after 4 months in four equal installments without any interest. So that is, I could go to the customer, buy a product, and pay for it in four equal installments without using a credit card or paying interest. This caught on like wildfire, and this was basically restricted to Australia. Today, in Australia, Afterpay has 16 million users, which shows there's a huge demand for a product which people could use to pay in four equal installments and not having to pay interest for the same. This rode on easy monetary policy that was there around the world, where this company could raise money at very cheap rates. In turn, they charge the merchandisers, the people, merchants, basically people who are willing to offer their products on four equal installments, a fixed fee plus a commission for processing the payment. So basically, the app would do this. That is, I came to a shop, I bought the product. I agreed to pay in four equal installments. That an installment as soon as I bought it, plus three installments. The shop would pay the processing company a commission and a fixed fee for making that service available. The company Afterpay would in turn borrow the money from the market and fund this. This had become an extremely popular company. This company was just originally started in Australia and was listed in the Sydney Stock Exchange. This company was doing extremely well. News has come in that this company is going to be acquired by Jack Dorsey's Square, and this company will become global. That is, Afterpay will become a universally available product wherever Square is there. What has happened is Squares, there is going to be a share swap. That is, for every share of Afterpay, 0.30 shares of Square. That is practically for every 3 shares of Afterpay, you would get 1 Square share. The acquisition is going to cost $29 billion for in extra shares for Square. That is, Square is using its stock as currency, issuing $29 billion worth of stock and exchanging it for Afterpay shares, and will acquire this company completely. This is what technology allows you to do. If your share is already in existing, you have free cash flow and your shares are very valuable, then you can use your shares as currency. Just create more shares and buy a new company with that. That is what this Square company has done with Afterpay. The success of Afterpay shows that at least in developed markets, that people want to buy in installments without having to pay interest. This service will definitely be successful in the developed markets and soon will trickle into markets like India where people like to shop on credit. So, this fintech processing and fintech companies have definitely provided credit card companies a run for their money. If you use your HDFC credit card or use your ICICI credit card, except on special offers, you are expected to pay a lot of interest. A product like Afterpay will allow you to buy any product on 4 installments without paying interest. Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.